We're going to talk about, surprise, surprise, Tesla. Just recently added to the S&P. A couple days ago, it was going to be a top 5 market capitalization addition. The way it's trading today, it could be higher than that.
Hey, it's Kevin in Colorado. Welcome to another episode of Tesla Today. We're going to be talking about the Tesla takeover. Tesla stock has been on a tear. Where's it going? We're going to talk about that and what it means for our money and your financial freedom going forward in this amazing stock and this amazing CEO, Elon Musk. We're also going to talk about S&P 500 inclusion. Obviously, it happens December 21st, how that impacts the stock, what does that mean for Tesla, and the EV revolution as we start to transition to the Biden administration and their clean energy program. Let's jump right into it.
I continue to own the stock in my portfolio and will continue to do so. First, I want to talk about the fundamentals quickly here. It's unbelievable in terms of its current PE, maybe a 900 PE at this point. Really, really unbelievable. But if you look at the forward earnings, we're trading 100 times next year's earnings. And granted, that's a lot. Trust me, I understand. But listen, I think the pricing mechanism of the market is becoming more efficient. It's hard to put a fundamental valuation and justify what's happening on Tesla now because markets are getting smarter and they're pricing the CEO and the visions of the CEO.
Don't fast forward now. Todd's about to blow your mind. Elon has something up his sleeve. He's a planner. He doesn't look at tomorrow or next week or next month. This guy looks years and decades into the future.
And as an anecdotal backup, as I'm trying to educate my 7-year-old twin boys and get them something to do here in this crazy time, I'm trying to get them to focus on space a little bit, learn about the stars. And I have them download an app on their iPads and they can track the stars and the satellites. And what's crazy is if you do that, you see all these SpaceLink satellites floating around the globe. That's Elon in his private market, SpaceX, trying to blanket lower Earth orbit with these satellites to give global satellite coverage. And I'm thinking that's extremely smart with the onset of 5G, with what he's doing with the Tesla and everyone in a race to get a driverless car. If he can accomplish global satellite coverage, seamless coverage with the electronic vehicle offering, and he can marry those two together, I think that's game over.
Could Todd be right? Was that Elon's plan all along? Get SpaceX to release the Starlink, to hook up full self-driving with Tesla, to change the world? I think so.
And I think that's what the market is really starting to price. So they're two separate companies, SpaceX being private, Tesla obviously not. So it's really hard to justify current valuations. The market is pricing the visions of the CEOs, and I think that's what's going here, and you have to use the technicals as well as admit what's going on in the fundamentals. And speaking of, here's an interesting chart marrying the fundamentals and the technicals of a private and public company. This was a consolidation, and those of you who follow Elliott might recognize a nice 5-wave pattern here. But there was a pretty good consolidation heading into the May 30th SpaceX launch. And once that was successful, I think Elon's personal stock went up in the court of public investing opinions and got a little bit of a boost and broke the consolidation. Then we moved up strongly here. And look, same thing just happened here. We just went in a little bit of a wave 4 triangle. We had the November 17th SpaceX launch. Elon came out. He courted all the astronauts out in nice Tesla cars. I mean, it was a great branding image for him. So I still see additional upside move here in Tesla. I see upside resistance not until mid sevens. So now, another thing on the fundamentals I do want to address is, like, people are saying the company currently is only cash flow positive because they're selling these carbon emission credits that the government is offering. And I think the numbers are, it's 428 million in sales in Q2 of 2020. There were 418 million free cash flow positive that quarter. So a lot of people are saying, well, it's the only reason that they're making any money. Yeah, possibly. But I also think it's a smart move playing the long game. They're paying their competitors who sell combustible gas engine machines to not retool and not spend the time now to get in the electronic vehicle market. I mean, they're still focusing on, keeping their current inventories up. So I think he's buying himself more time to figure out how to bring all of the gigafactories and the production plants and bring Germany online. I think he's buying himself more time. I think it's smart. And yes, he's posting profits where, again, there's a lot coming from the sale of the carbon emissions, but I think he's just playing the long game. So
let's talk a little stock perspective on Tesla. As of right now, the stock is currently trading at $557. Of course, that's post-split. That's happening today. To put this into perspective, About $557 today. This is exactly what we were trading Tesla stock at earlier in about mid-April to May of this year, not last year. This year, we were trading this stock at $577 pre-split. Then it went to $1,000. Then it went to $1,500. And then it announced its stock split. Ran all the way up for the 5-for-1 split. And here we are back at the exact same level that we were just trading a short 9 months ago. That is growth. That's why we're involved and invested in Tesla. That is insane. How long can it keep up? We're going to talk about it. All right, down and dirty with Tesla and the S&P 500. Basically, this is what it means. The float share, available shares of Tesla out there in the actual market, the index funds have to match the S&P 500, those that do that. So basically what that means is about 1 out of every 6.5, let's just call it 1 in 7 shares of the currently available shares on the market must be bought by these index funds to match the S&P 500 sometime between 30 days prior to the inclusion of December 21st or within 30 days after. Obviously, the closer they are to the December 21st inclusion date, that will help them actually track the S&P 500. So if you took $100 after December 21st, after that Tesla is included in the S&P 500, you took your $100 bill and you put that into the S&P 500, that $100 would get you $1 of investment into Tesla stock, as it now makes up about 1% of the actual S&P 500. That's how it works. In the short term, it's like squeezing a tube of toothpaste. There's only so much toothpaste in the tube. Everybody wants to brush their teeth at the same time. It's going to cause a short-term demand. That's why we're seeing Tesla starting to ramp up. We will continue to see that ramp up now until Christmas time. Then after that, I imagine we'll have a lull, probably have a little bit of a pullback. You heard Todd Gordon talk about that resistance somewhere between $650, $700 a share. We'll probably have a small lull in the action, consolidation phase, just like we saw over the last month. And then we're going to see Tesla start to continue up as the earnings for Q4 comes out sometime mid-January of 2021. And they're going to crush it. They put more than 500,000 is what they're going to report out in 2020. That's cranking a lot of cars, and they're going to do more than 1 million in 2021. So all kinds of exciting things happening. Then, of course, in January 20th, the transition, the Biden administration, not talking politics, we're talking about clean energy and what it means for EVs. If Joe Biden's able to stick out a big stimulus package that actually stimulates into the EV market and puts out the incentives for the Americans to get rid of their ICE or internal combustion engine cars, and actually go to EV, that's going to be a win for Tesla stock. It's going to be a win for NIO stock. It's going to be a win for Xpeng. It's going to be a win for Lordstown. It's going to be a win for all the EV stocks and everything that goes along with it. So hold on to your hats, folks. It's going to be a heck of a ride, but this thing has a long way to run. 2021 is just going to be a kick-ass year for Tesla. We have 2, not 1, but 2 gigafactories coming online. We have Giga Berlin coming online in May, shortly followed by Giga Texas and my Cybertruck, hopefully rolling out by the end of 2021 as well. So 2 huge positives there. And that's not even to start talking about Tesla robotaxis, the new full self-driving beta releasing hopefully to the masses come around Christmas time this year. Tesla insurance, Tesla energy, Tesla solar. It just keeps on getting bigger and better. And of course, there's going to be a surprise announcement. We know Tesla's working on a $25,000 car, as well as where is the next Tesla Gigafactory going to be? Will it be India? Don't know. And Elon Musk is now the second richest man in the world behind Jeff Bezos. He just overtook Bill Gates.
Elon Musk just passed Bill Gates to become the second richest man in the world with a fortune of over $128 billion. Now, Musk has added $10 billion to his wealth just yesterday and today, and he has gained $100 billion just this year. That works out to $13 million per hour for all of 2020. Now, in the coming years, Musk will not only benefit from his 21% ownership of Tesla, but also from that huge compensation package granted back in 2018, which could award him options on 20 million more shares. That could be worth $55 billion more. Now, he's already received the first 3 of 12 tranches of that stock, and he's set to get the 4th pretty soon. But if you look at one of the targets that Tesla was supposed to hit, it's expected to hit a market cap of $650 billion by 2028 for him to get that. Now, that sounded far-fetched back in 2018 when the market cap was only $60 billion. Today, it's already topping $515 billion. All right, so what would Tesla's share price have to get to for Musk to pass Jeff Bezos as the richest person in the world? Well, let's assume that Amazon stock didn't change. That's a big assumption. But Tesla would have to top $900 for Musk to get to the $183 billion. Now, Bezos has not been standing still. He has added $67 billion to his wealth just this year, while the world's billionaires in total have added more than $1.3 trillion to their wealth. And John, just as a quick aside, we marveled at Jeff Bezos reaching $100 billion. It took him 20 years to do that. And remember, Musk added $100 billion just in 11 months. Unprecedented.
Thanks for watching. I'm Kevin, and you've been watching Tesla Today. See you on the next episode.